Good evening, everyone. I'm Kirit Sethi. I'm one of the co-founders of the India InsurTech Association and the founder of RIA Insurance. The India InsurTech Association is excited to partner with the Institute of Actuaries of India to organize this event today. Since the audience here today primarily consists of the actuarial community and InsurTech companies, I'll spend a quick minute to introduce the India InsurTech Association. The India InsurTech Association, or IIA, started as a conversation between Shwetank Verma, Subhajit Mandal, and me last year. While InsurTech is a hot topic of conversation in the insurance community, we found that there was no formal body in India driving interaction between startups, companies, and professionals within the space. And when we looked outside of India, we found that practically every other country or region had an InsurTech association. So we started this as a not-for-profit that brings together the entire InsurTech ecosystem in India, which is startups, insurers, reinsurers, policymakers, service providers, and insurance professionals such as actuaries onto a single platform. Also, as we started as an organization, we outlined a high-level mission and a set of objectives for ourselves. Some of these are, one, what we would like to do is facilitate partnerships between startups and the broader insurance industry, such as insurers, reinsurers, service providers, and investors. Two, we are finding that Indian insurtech companies are now very ambitious and want to go global. So we want to help these Indian insurtech companies access global markets. Three, what we also want to do is we want to connect insurtech startups with insurance industry experts and professionals, such as the actuarial community, which is present here today. Four, we also want to be the independent voice for insurtech to engage with policymakers to foster forward-looking policies. And five, we want to publish and promote thought leadership. And finally, number six, what we also want to do is we want to promote initiatives where we end up using technology to increase the insurance penetration in India across different socioeconomic segments in a more equitable way. We've gone on, and as an organization, we've launched and we've conducted many different initiatives. Amongst the many initiatives, we've done events on InsurTech with some of the largest and well-known InsurTech communities and content companies such as InsurTech Connect and the Digital Insurer. As an organization, we've also published an annual report in collaboration with BCG on India InsurTech landscape and trends, which is available on our website. We've also, by the way, again, to help our members grow globally, we've done more than 10 plus tie-ups with similar InsurTech associations globally, which share a similar vision and mission, such as Italian InsurTech Association, InsurTech London, InsurTech Israel, InsurTech Australia, etc. And then finally, we've gone ahead and forged partnerships with organizations such as the Institute of Actuaries of India, National Insurance Academy, Gift City, BIMTech, who are each working to help the Indian insurance community grow and succeed in their own respective ways. Keeping some of these key objectives in mind, the Indian InsurTech Association is proud to have signed an MOU and partnered with the Institute of Actuaries of India. The two organizations are working together to bring opportunities for the robust and thriving actuarial community by connecting them to Indian InsurTechs and global InsurTechs. By the way, for the actuarial community, what we're finding is a number of InsurTechs globally are open to hiring top actuarial talent and have them work remotely. Since India has one of the world's largest community of qualified and student actuaries, we want to create the bridges for this actuarial community to be able to explore these roles through jobs, internships, and consulting assignments. IIA and IAI also plan to work together to publish thought leadership on InsurTech and work on very specific strategic initiatives which push forward the entire insurance industry, such as initiatives on open data, data standards, technology standards, etc. And then finally, both the organizations will continue to organize events together, such as the one here today, to help build awareness around the actuarial profession and the role in InsurTechs. This is a great segue to the topic for today, which is how actuaries can help InsurTechs. I'd go on a limb and say that there cannot be a more exciting time to be an actuary than today. The amount of data which is available today is unprecedented, and we have now the cheap computing power available to increasingly make more sense from this data. In this age of big data, advanced analytics, actuaries have a crucial role to play to be in the forefront to help InsurTechs in areas such as new product development, risk assessment, risk management, more granular pricing, underwriting, etc. Hence, we are also finding that actuaries are now playing key leadership roles in many of the largest InsurTech companies globally. With this, I'd like to welcome our speakers for the day. We welcome Mr. P.K. Arora, member actuary at IRDAI, who's kindly consented and joined us today and will be addressing the audience. We also look forward to hearing from Mr. Bal and Mr. Gopalakrishnan from IAI and our other panelists who bring a vast amount of experience in insurance and InsurTech to this event today. With this, I'd like to welcome Mr. Bal and Mr. Arora at the stage for the welcome address. Thank you.
And thank you, Prerak, to give the good starting of how we have been talked about initially. I'll just take quite a few small part I want to mention over here. That the current situation is such that we have learned how to continue our day-to-day activity in this new normal. And at the institute, we are able to serve members or all other activities either through from the work from home facility or through the digital wage or limited attendance without any disruption. We are able to do all the activities. I think, believe almost all the companies, everybody, every organization doing the similar lines. And we have completed few of the part major activities like our usual online examinations through digital mode, and also the to the our actual paternity students so that they can help them to make it and they perform a little better in the examinations. So all those parts initiatives we have taken, no doubt, and I'm very happy to share that we have been conducted also a few days back in the 21st August Actuaries Day successfully on the digital platform, and no doubt quite a few webinars we are doing in the institute side as a part of our continuous professional development and obviously to updating ourselves in the current environment. We are always working with the traditional, non-traditional actual areas and different webinars within this particular framework. We want to transfer our institute to IAI 2.0, and the institute has been enabling its members and students to the forward-looking and the future roles. As a part of our strategy, as just now Prerak has mentioned, IIA has signed the MOU with the IIA to build awareness about the Insurtech among the actuaries. I also create awareness about the role of actuaries, expertise among the insurance Insurtech firms. Obviously, he has mentioned quite a few people are already working on the several Insurtech firms. So, how we can make it much more collaborative way to create thought leadership and organize lots of events so that both of us can bring two together and very nearer. I'm happy to be part of this first such of event of our collaboration. Possibly we understand insurance very well. No doubt everyone also understands the technology and its impact on the any business environment. But about the insurtech, the understanding may not be the level it should be. That is my personal view. But I believe insurtech means innovation, innovation in the product features, innovation in the different elements of cash flows, distribution, disruption, and the cost of revenue curve, forward-looking models, leveraging demographic advantage, and digital or disruption industrial part. So the insurtech offers interesting opportunities to the actuaries, as actuaries may understand the depth of the insurance business, opportunity to continuously innovate and grow, how to raise growth in the capital, innovate the workaround, and give the solution for any obstacles or impediments and challenges. No doubt, Insurtechs build bridges to the future. It is the currency to build the insurance business models based on the demographic advantages, or it may be digitization and minimalistic product design. Innovation is of the critical significance as the vision of India of becoming a well-secured society by registering high rates of growth in the insurance penetration and the insurance density, by aligning assumptions closer to the changing realities, actually really can help better realize the insurance potential of the country. As I mentioned, actually provide an expert understanding of the full breadth of the product features, pricing, cash flows. So understanding about the future scenarios and how product behaves under different scenarios, provide the experts to design product development, pricing, profitability analysis, or any other reserving requirements. Actually also experts in the regulatory requirements and how it impacts the underwriting, distribution, policy administration, and all other processes in the insurance business. I want to mention one thing. Actually, they have the capability to design the business model from the desired outcomes and actually extract the business wisdom. Actually help in building the reverse models. Actually can help identify the input and parameters from the assumption of the expected outcomes. If such inputs are not available, obviously actually can help in identify the alternate inputs, and if such parameters are not feasible, suggest a business model to make it feasible. So that ability to represent and communicate about the insurtech to the entire world, an ability to connect insurtech to the traditional insurance companies, an ability to represent insurtech to the regulator, and insight on process, valuations, and models. and obviously an ability to engage the technology experts and the data scientists. One of the criticism actually face is the traditionally customers of the regulations. Being they are the customers of the regulation, actually they are tagged an embodiment of the traditional thinking that they are slow moving and elephant can dance attitude. But general criticism against the actuaries, I don't have the enough data and actually do not think that out of the box and do not learn from the other industries. But I believe, as Prerak has really mentioned, now data and everything is really available, and actually they day to day they really play with the data, they analyze the data. So I exactly sure and I trust that actually a much better place in currently taking the decision first, doing proper analysis of the data and guide lots of board in their insurance business in several locations, and also in the communication of the technical terms in the non-technical ways to the non-actuary audiences. Insurtechs are the technology companies, Insurtechs are the software companies, Insurtech are the product company. But the model to design the business from the outcomes promised to the investors. Therefore, I think actuaries needs to demonstrate different types of skills to deliver the value propositions. At the same time, not competing with the core technology resources of the data scientists. I'm quite sure with these initiatives, with the collaboration of IIA and III, both the members will be benefited in the future to transport the insurance industry to a different level. Let us actively participate today in this first webinar and get the best takeaway from this. I think Mr. Arora ji is already there from the regulator side. Let us try to listen to them. Thank you.
Thank you, Subhenduji. Very good evening to all. How actuaries can help Insurtechs? I feel this is the most relevant topic in the current context, particularly after the onset of pandemic, when there has been a greater realization for the use of digital technology, out-of-box solutions in all aspects of insurance operations, whether it is engagement with the customer or marketing, insurance distribution, products, policy administration, claim settlement, whatever is the area. Now there has been a greater realization that there has to be modern and new methods of engaging with the customers so that the customers get hassle-free and efficient services from the insurers. In the last few years, we have seen many insurtech companies have entered the space, insurance space. There are many venture capital funds now who are trying to reshape and redefine the insurance landscape in the country. So for any venture or startup, or for that matter, any company to succeed, there has to be 2-3 ingredients. The first and most important requirement is a funding. There is someone to fund, and there is someone to take that idea and convert that into reality. He may be a non-expert, but he is an entrepreneur. So to succeed, what else is required? The requirement is of domain expertise, the knowledge, and this domain expertise and knowledge can definitely be given by the actuaries, because actuaries have the broad-based knowledge about the industry. So I am telling this from the Indian context, because if we see what is the insurance landscape in India as compared to the global landscape. In the global insurance, about 55% of the premium is contributed by the non-life segment, and 45% of the written premium comes from the life segment. But the situation in India is different. Here, almost 75% of the written premium comes from the life segment, and around 25% of the premium comes from the non-life segment. So when we talk about the life segment, that's a long-term products. The customers get associated with the insurance companies not for 1 year or 2 years, for the decades. And there are products, most likely products, most liked products are the saving type of products. And in this situation, for any insurtech to succeed in the insurance space, it is necessary that they understand what type of products are available in the market, what type of products are liked in the market, what are their nuisances, how these are designed and developed, how these are priced, and how these are sold in the market, how these are distributed, how these are reserved for, and what are the various other activities related with these products. And who else better than actuaries, who actually have designed and developed those products, who have priced those products, who have assessed the risks for those products. They are the ones who can provide the critical inputs to any insurtechs to succeed in this space. So there are many activities. Suppose I take underwriting. So for any life insurance proposal, lot of information is collected from the policyholder. Actually, I have myself involved. I was involved in the underwriting about 25 years back. When you see the life insurance proposal, it's not about just personal information or financial information or medical information. Even the medical history, not even the medical history, even the personal history about the family members of the previous insurance, all those information, all that information is collected and it's available with the insurance company. That is the traditional data. So about 25 years back, when I used to underwrite the proposals, at that time, LIC mechanized the underwriting process. In the mechanized process, whenever data was fed in the system, immediately the suggested underwriting was coming from the system, because they have provided the algorithm, the metrics, the slabs, and various requirements age-wise into the system. And while getting the proposal from the system, immediately we came to know that this is the underwriting requirement, whether it can be accepted at the standard rates or whether any ECG or special medical reports or blood tests are required. And this happened 25 years back. Now the technology has improved to a great extent. Now there are wearables, there are security alarms, there are infrared devices who can sense when the elderlies fall, there are telematics, artificial intelligence, robotics. There's so much of information available. Now we can really find out how many steps a client has taken in a particular time period, what has been his sleep pattern, how many calories he has consumed or burned during a particular period, what has been his oxygen levels, blood levels, or some heart rate, all these information, even his driving behavior, how much miles he has driven, how much time he has been in his car on the road. So when all this information is available, which has a direct impact, whether it's mortality or morbidity or the claim incidence rates, so this information can be used to correctly assess the risk and price the product for a particular customer, to customize the premium. So in this aspect, actuaries have the better understanding of all these things, and they can rightly assess and price the products. Similarly, if we go about the distribution, so data which is collected from the policyholder, normally earlier times it was felt it is either for the purpose of assessing the risk and further reserving and policy servicing. So this was the use of the data. But now, when I was in marketing 20 years back, this data was LIC started using this data for the purpose of marketing also. For example, the lists were created from the data warehouse. How many are the policyholders who have not taken any new policy in the last 5 years, and those who have taken the subsequent policies, whether they have taken from the same distributor or some other agent or distributor who have connected them. So using this data, the propensity to buy a new insurance policy was calculated, and definitive lead were given to the branch in charges to use that data and see what is the result. And when we use that data, the success rate was very huge, and this happened 20 years back. Now see, in addition to this data, lot of other data is available. Now whether it is social media, whether you digital payments, I think few days back I was seeing a WhatsApp message where it was shown that India has exceeded China as far as the number of digital transactions are concerned. So from the digital payment records, you can find out the expenditure pattern of the customers, on what goods he has spent in the last few months, whether those goods need insurance or not. So much of unstructured data is available. It's only the method of collecting that data within the scope of current regulations and using that data for the purpose of insurance penetration. And when it is the data driven decisions, no person is better placed than actuaries to use that data for the purpose of the betterment of the insurance industry. Then I'll talk about something about persistency. You see, one of the major problems faced by the insurance industry is that after few years, in fact, in the initial few years, the major proportion of the policyholders stop paying the premiums. Their policies lapse. In the first 5 years, in most of the companies, more than 50% of the policyholders lapse their policies, stop paying their premiums, and these policies go out of the books of the company. And I'm talking about the number of policies level. Though in the last few years, there has been some improvement in the persistency as far as the premium amount of premium is concerned, but it's not so as far as the number of policies are concerned. Now, when you have the data with you, when the actuaries use that data about and link it with the other outside macroeconomic indicators, what has been the inflation levels, what has been the income levels, whether there has been a downturn in the economy in a particular segment, in particular geographical area. So then we can find out what are the areas and what are the segment of policyholders where there is a likelihood of lapsation of policies, and the targeted decisions can be taken in that area so that the persistency improves. So there are many areas where the Insurtech and actuaries can actually collaborate. The actuaries have already established themselves in the traditional insurance companies. They assume a pivotal role. Now, in the current context, it's not just about pricing, reserving, and modeling. It pertains to all the activities, all the areas of insurance distribution, underwriting, policy servicing, claim settlement, everywhere. So actuaries can actually become a connect between the non-expert entrepreneur who is non-expert in the insurance area and expertise. For the success of any startup, the domain knowledge which is required, the skill set, the focus which is required can always be provided by the actuaries. Why I'm saying this? Because if you see the curriculum which the actuaries go through, the study process which the actuaries go through, it is not just about pricing, reserving. It has finance into it, it has economics into it, it has business environment into it, it has statistics into it, and it has how to deal with, how to communicate with the actuarial audience, how to communicate with the non-actuarial audience. All those activities are already there in our curriculum, and in addition, they are working in the insurance landscape and they are working in the traditional insurance companies. Their work experience along with the knowledge which they have gained through this curriculum process makes them a perfect fit to help the Insurtechs. There may be some areas where improvement is required, like Subhendu was telling, they always are seen as a resistance to some change, and sometimes it is felt that the communication skills are not to that level which are there in other which are there with the other domain experts. So if there are any such things, or domain knowledge about how the Insurtechs are created and how they function, so this type of knowledge level can always be created, can always be enhanced by way of seminars, by way of workshops, and if required, by creating some modules in our existing curriculum. So there is a great opportunity, and this opportunity can be used in our country to create more awareness about the insurance. And what if you see from the different stakeholders' point of view, is to think about the policyholders. They actually want the value for their money. They want better and efficient services. They want hassle-free claims settlement. All these are the areas where the Insurtechs can actually be enablers. Similarly, if you see the companies, though with the use of digital technology, they want the expenses to go down. They want the sales to increase. They want the profitability to increase. If I think upon the regulatory point of view, we also want the compliance levels should increase. The mistakes and errors should reduce. Insurance penetration should increase. So these are the areas where there is a perfect synergy between the knowledge and the technical things, the technical inputs which the actuaries can provide, and the out-of-box ideas and innovations which Insurtechs can bring. So the combination of these two can definitely work for the betterment of all the stakeholders. This is my personal view, and I think in the years to come, it will be very interesting to see how this association between the Institute of Actuaries of India and this Insurance Association of Insurtech companies, how this progresses further. But I feel that it will be for the betterment of the industry. And in the next two sessions, I think it will be interesting to find out the various inputs which come from the experts in the field. So I'm very thankful to the Institute of Actuaries of India as well as the Insurtech Association for making me a part of this seminar. So I wish all the best to all the actuaries and Insurtech companies for the success in the times to come. Thank you very much.
Okay, hi. Good evening to everyone. Quite delighted that we are more than I think 110 people attending this with quite diverse backgrounds. So I just want to be conscious of time. I think we are running about 10 minutes behind schedule. So there is 35 minutes allotted to us for this panel. We will take 35 minutes. Roughly what we will do is there are 4 panelists. Each one will take roughly 6 minutes. I'll take a couple of minutes and then we will certainly have time for Q&A. There are four panelists. Vikas comes from Universal Sompo with General Insurance. Abhijit Paul, I know him for actually quite a few years. Munich Re India. Sumit, I know him for some years. Consulting actuary and co-founder of Protect Me Well. And Duke, who is the Chief Actuary and Head of Global Actuarial Services, XCDAN. So with that, let's get started. So the topic, how actuaries can help Insurtech. Actually, the topic made me thinking, or actually made my mind wander. No? Because in my understanding, the actuarial course, as we heard from Subhendu and Mr. P.K. Arora, the actuarial course trains a person to look at understanding a problem or spotting an opportunity and find answers to these by analyzing all the data that's available, as well as seek for relevant data where data is hopefully not available. And insurance is one of the areas where these skills are extremely valuable and in fact critical for robust financial success of the business. So that is actuaries, and I grew up being told, which I actually believe, is that actuaries are the original data scientists. And the key difference being that actuaries have traditionally worked with aggregate data and historical data, largely structured data. Okay, so that's actuaries. Now, what is Insurtech? So Insurtech, as we know, with the emergence of now data size is no longer a constraint, data storage is not a constraint, network speed is not a constraint. There are analytical tools which can even analyze structured and also unstructured data. And data is far more personalized now, personalized and current. So it's no longer historical and aggregate. And Insurtech actually uses, puts to good use hardware, software, and user interfaces to address inefficiencies or look for opportunities in the insurance value chain. And it often involves technology, data, and analytics. In India, Insurtechs, and I have been associated with a few of them for some years now, have actually grown rapidly across the value chain, be it distribution, be it customer journeys, be it product design, be it more sharp and more sharper pricing, identifying frauds before the frauds happen, underwriting, claims, and also lots of operational efficiencies. So therefore, I actually would say that instead of saying how actuaries can help Insurtech, a better way of looking at it is how can the actuarial profession and Insurtech collaborate? Because data and analytics are the common thread between the two. And I also see alignment of interest between the actuarial profession and the Insurtech, because both actually focus on the interests of the customers. The actuaries want to deliver fair value to customers and a reasonably good experience, because that translates into stickiness of the business, whether it's general insurance or life insurance. And Insurtech thrive on, largely the ones who are customer facing, thrive on actually finding solutions for customers' problems. Stated, often unstated, right? So that's how I see the collaboration moving in quite well. With that, I will move on and probably pick Sumit to begin with. Sumit, what actuaries need to do in order to better contribute to Insurtech? And could you also add on your own experience in running your startup, Protect Me Well?
Yeah. So yeah, I think since the webinar started, we've been talking about how actuaries are well placed to help Insurtechs. But let me start talking about two things where I think actuaries need to cover some grounds to be able to collaborate better with Insurtechs. This is based on my 4 years of working with Insurtech clients across the globe, and also running Protect Me Well for about a year or so. So I think the first bit is around the mindset. I mean, it's kind of given, right? I mean, we have emphasized enough that actuaries are well placed in terms of technical knowledge, in terms of business knowledge, to be able to collaborate meaningfully with Insurtechs. The things that actually need to spend some time enhancing their skills is around the softer side and some bit on the technology side of things. So if I were to categorize, talk about two or three key things. First comes to my mind is a mindset. Actuaries in an Insurtech setting are work in a way that they would want to be super comfortable with what they are doing, get to the last level of detail, want premiums to be calculated to 2 decimal places, want reserve numbers to be calculated to the nearest lakh, for example. And that is important. That is very, very important in a traditional insurance setting, right? Because you as an actuary are being relied upon for the let's say solvency of the insurance company. Customers would directly or indirectly rely on you for the premiums to be fair. Regulators rely on you a lot, and hence being able to being super comfortable with what you're doing, the numbers that you produce, the numbers that sign off, is very, very important. But things are slightly different in an Insurtech setting. In Insurtechs and any startups, they first jump and then look for a parachute. I mean, it's not something that I subscribe to, but the idea really is that in most cases you may not have the means to be able to get everything that you need to get started. You in most cases you would build the aeroplane when you are flying, and hence you may never be super comfortable unless you have come up with your first MVP. And this is something which is not seen commonly in actuaries, and hence I think when actuaries collaborate more closely with Insurtechs, the first thing changes is the mindset, being comfortable with not being comfortable. I think that becomes most important. The second bit is around understanding the technology part of it. Yes, we know the technicalities on the insurance side of things, the actual side of things. But let's say if I'm as a consulting actually helping someone an Insurtech working in blockchain or using machine learning, do I need to be able to write codes in Python? Maybe yes, maybe not. Do I need to be able to write smart contracts in blockchain? Probably not. But what is that I need to know to be able to say that I'm qualified to help an Insurtech? I think it comes down to two bits. One is essentially, do I know what are the possibilities that this technology brings in? What is that, let's say, machine learning could potentially do in an Insurtech world or insurance world? And the second bit is to be able to identify the new risks it brings in. So taking example of, let's say, IoT devices, right? Of course, they bring in new sets of data, either in health telematics or vehicle telematics, or even in the home insurance setting. But it also brings in the risks around cyber risk. Let's say, what if someone hacks into your system and plays around with it? It also brings challenges around operational risk. What if the device that you're relying on doesn't function well? So how do you deal with it? So hence, actuaries need to understand technology enough to be able to understand what are the possibilities with it and what are the additional risks that it brings in. The third bit is more around selling skills, I would say. Once you are actuaries in insurance companies are treated very, very differently, right? People have time for you. Anyone, right from the junior level to the CEO, would be happy to hear you, right? But when you're on the other side of things, maybe representing an Insurtech, this privilege is no longer around. So one has to sharpen one's skill on being able to sell the product or the idea in first 2 minutes. And I think that's where actuaries need to spend some time enhancing skills.
Thanks, Sumit.
Maybe I can talk about Protectnivel or how my skills helped in building Protectnivel later. Maybe let's go on to the other speakers.
Yeah, sure. So I'm just keeping an eye on the time. Sumit, so to pick from what you said in some way, which is what I heard, Subhendu and also probably Mr. P.K. Arora saying is that maybe actuaries are maybe risk averse or not excited in dealing with uncertainties, right? So I don't know, maybe it's part of being a system or an organization which has a culture where, so there are cultures that would encourage fail fast, test and learn. In the insurance world, largely, if you do something and you lose money, which it will take some time to start emerging, then it goes into a big, deep post-mortem and finger pointing. I don't know, with that, let me move on to Vikas then. Because in the world that you currently are in, which is general insurance, where I see a lot more exciting things happening with the Insurtech space, particularly in personal lines, whether it's motor, home insurance doesn't seem to be that big in India. In health insurance, but in the current context. So when, let's say, a business proposal or a partnership or alliances come to you from the Insurtech world, how would you evaluate? How would you react?
All right. Good evening, everyone. While evaluating, an Insurtech, so I don't really wear a hat of an actuary. I generally, look at from overall business proposal for the company. Now, the first thing, while collaborating with any Insurtech, what's the basic objective of collaboration, whether it is something financial in nature or something strategic in nature. Now, there are so many Insurtechs who have been working in Indian market across the overall insurance ecosystem and on various ideas, whether to bring in more efficiency to the overall, insurance processes or to have some sort of say disruption in the market, some new distribution model, some new product lines by the use of technology. And there are few Insurtechs who have been working on the periphery of the overall things, so things which are maybe good to have for an insurer, but which may not be like must have. And if adopted, they may add some value for in the overall company offering to our customers, to our channel partners, agents, etc. And I believe all the ideas which are there by different Insurtechs, they are great, and few of them have already been adopted by the industry, and few of them and others would be adopted in the very near future, right? So now, when we're talking about the association, so for example, if I'm associating with some Insurtech for a new product line, the objective would be more strategic in nature rather than financial in nature. So this might be, for example, if I'm trying to gain experience in an upcoming insurance segment, and the idea is to collect data and to gain experience before we decide to really incorporate the same in our long-term business plan. So I just give you an example. So recently, in a very strategic move, our foreign partner Sompo recently partnered with an Insurtech, Cover Genius. The idea was basically to grow our affinity and retail footprints and to have more simplified product and insurance experience for our customers. Now, so when we, I come across Insurtechs, so there is something that, that we need to understand, that all insurers are having things which are very much specific to them. When I say specific, it is in terms of the maturity of data and the processes and the way, as a company, we are trying to grow in terms of our products, in terms of distribution. What are our immediate pain points and which we are trying to address. So all insurers are different and they are lying on a different level in the maturity curve. So we have, new age insurers who are like just 4 to 5 years old. And then we have big insurers who are like 20 years old. And then we have PSUs who are like decades old. Now, all of us are having, different challenges and different opportunities and with varying priorities. Now, what is important for, say, one insurer, one large insurer, I may not be even looking at that, depending upon my, position in the overall maturity curve, or more importantly, I may not be, following the same path, and I would be trying to create a different niche for me. So one very important thing to understand for every one of us is like industry do have few common problems, but every insurer has their own priority. And while dealing with any Insurtech, so the important thing to see whether this Insurtech is solving something which is of burning issue to me, or easy, like, you know, Insurtech is talking about something which is generic to the industry as a whole. So I would just, you know, give you an instance. So some time back, I was introduced to Insurtech, who had built a, you know, very beautiful and a robust system across health OPD claims. Now, I went through the entire presentation with my team, understanding the overall process, and we spent, like, you know, a good amount of time with that. And I would say the overall process, the system that they built was quite agile, and the overall, you know, the process, the directories, the cataloging, I would say it was perfect. Now, at the end of the presentation, the guy asked me, okay, what next? I said, you know, thank you for the presentation, but I can't proceed. The guy simply asked, like, you know, why, what happened? I said, out of all of my health products, there is only one health product which offers OPD claims. And on an average, I get only 2 claims per day. So OPD claim solution is not a burning solution for me at all, right? So the point is, maybe to some other insurer, which is having, you know, a large insurance portfolio, having a lot of OPD claims, the solution have definitely made sense. But for me, it doesn't make any sense. It doesn't have any, you know, financial angle to it. Why should I spend on something which is not a problem for me? But definitely, yes, IPD claims were a issue for us. I definitely requested them that if the same model can be, you know, translated for IPD claims, and they came back after some time with a beautiful, as beautiful system as they showed me for OPD. You know, so I think in the process, the Insurtech also, you know, realized that OPD may not be the right way to go, but the IPD, which is a bigger issue for the industry, and as well as, you know, all the insurers here. So now there are so many Insurtechs, you know, which have been working on various ideas. So as an insurer, you know, what we do look for, basically what do we, you know, work around. So 3 primary things, if I would say. One is, you know, someone already talked about customer experience, right? So how do I give my customers a better experience and a delight at every point, whether it is a policy issuance, whether it is the agent relationship, whether it is a claim processing, at every touch point. Second is new distribution channels. What are the new distribution ideas, new opportunities available for me to expand my business, other than the, you know, the traditional channels like banker, broker, agency, something like, say, digital. So when I say digital, it doesn't really mean, you know, through the website, but let's say through social media platforms, or, you know, selling insurance through as an embedded insurance through e-commerce websites. And the third and the most important, how do I sell more insurance? So when I say more insurance, it doesn't mean more of what I'm already selling, but newer products to cover with the newer coverages, covering something which is value to the customer, covering more people, covering, you know, increasing the penetration or insurance penetration, and that too with in a cost-effective manner. So while I come across any Insurtech, so I see, like, you know, what is the problem that Insurtech is going to solve for me, and whether that is a burning issue for me, or is it something generic that Insurtech is talking about.
Yeah, got it, because that's quite an interesting lens you have used, right? So in the entire value chain, and depending on the pain points an insurance company wants to solve, you need to find the right Insurtech or the right medium to address it. Abhijit, moving on to you. So in general insurance, I have heard and read about quite a few success stories where Insurtechs come in with IoTs, and there's a lot of data out there, right? So to come with more targeted products, more targeted pricing, and so on, even like, you know, bite-sized products and so on. On the other hand, when it comes to life insurance, after at least 10 years of various attempts being made, the success of Insurtech there has been somewhat limited. Even though I personally think the opportunities are huge, I start with distribution, for example, and distribution I would cover marketing as well. So there is so much money being spent in getting, let's say, if it's a website traffic you're trying to bring in, there's so much money going behind, and you measure return on investments in terms of conversions. I do personally think a lot of data analytics can go behind in saying how do I either improve the conversions, which could mean get more conversions or reduce the traffic so that it's only the right things that's coming into the top of the funnel. That's the distribution side. And then you go into pricing and there's underwriting where I think deep learning techniques can be put in place to actually so the system learns and starts doing at least certain routine cases and starts taking underwriting decisions. Same to do with claims and so on. I think you have worked a lot in some of these areas. So are there any use cases that you would like to share with us where, certainly it's an actuarial skill that came into play and worked with an Insurtech idea to say that here there is a win-win proposition?
Sure. Thanks, Gopal. So, yes, there is a lot happening in this space, and I work with a reinsurer, and there is a responsibility as well to ensure that we understand and we enable the insurance company, because essentially if insurance companies do well, the reinsurers will be doing well in terms of increasing the business. But at the same time, we also understand having the domain expertise of the working with multiple insurance companies. So for example, I can talk about one use case where right now there is an ease of issuance being talked about. Everybody is talking about ease of issuance. That means there is a lesser friction in the buying journey to ensure that the insurance is taken at the point of sale. But at the same time, the moment we open the doors, we know that there will be bad elements or the fraudsters who would try to come in. So how do we address that? So how do we, the problem statement is that how do we enable the ease of issuance, at the same time ensure that the fraudsters or people with anti-selective behavior are not able to get in. So the solution was, develop a machine learning model and deploy it on a API-based infrastructure to ensure that at the time of login of a policy, the data is sent to the model. The model analyzes the profile and sends back a recommendation. And that recommendation would help the underwriter to understand the risk, that the likelihood of an early claim that the profile brings to the policy, to the insurer. And accordingly, the overall objective is to ensure that we do stringent underwriting for the profiles that we believe pose a higher risk. At the same time, we offer ease of onboarding to those profiles that we believe are having a lower likelihood or perceived to be a better risk profile. Now, if I talk about technology, I think that is maybe very easy for the Insurtechs in terms of the way it was developed, deployed, and the ML ops that we put around to ensure that we are regularly getting the data back into the model to ensure that the model efficacy is there, and it's a real-time system. So all the technology and architecture is capable of handling a large volume of transactions. But where I believe we as actuaries can help or did help in this, and this model was developed by my team, and my team has data scientists and actuaries together, is to really understand. And many a times, the importance of each of the variable to the outcome that we are looking at is where the common sense comes from. And as we all know, common sense is not common, right? It's the most uncommon thing. So that is where the experience that we develop over a period of time in understanding the policyholder behavior and that resulting into early claims, and then put it in the model. Because when you give a lot of data to model, as you said earlier, the challenge was we had limited data in most of our models. The first challenge was limited data. Now it's the other way around. We have a lot of data. Now the question is, which data is useful to you for the model or the problem that you're trying to solve? And that is where we as actuaries can help, and to understand what are the profiles that are responsible for early claims, to ensure that the hit rate is higher with a smaller. So it's like when you are when you have a needle in a haystack, what you are attempting to do is to reduce the size of the haystack. And that is where the domain expertise helps us to actually ensure that we pick a very small sample of lives, ensure that the high likelihood of an early claim is much higher, so that when it is sent to the fraud control unit for assessment, we get a better outcome. We ensure that those lives who pose a much higher risk are not either coming into the portfolio or if they come in with a higher stringent evaluation. Now, once these models are set, the main aspect is that how can I use it in other aspects of the business? So the use case is like, for example, if it's high risk, what is the persistency of this profile over a cohort of, let's say, 3 years or 5 years? What is the resultant mortality experience? Is there a correlation with the mortality experience and the risk profiles to ensure that if were to price a product, designing or targeting a certain set of profiles, my pricing is more accurate? So it's not only deploying a model, it's also ensuring that we are taking it a step ahead and understanding the behavior over a long term of those profile, and ensure that when we are pricing next time, we are using the composition of different profiles so that the pricing is more appropriate and actually targeted to those sort of profiles that we want to bring in. So this this is one of the use cases. There are many use cases like how we can price a health product where wearables are used. Now, whenever I meet Insurtechs, I feel that with our knowledge and experience, we can ask the right question. For example, what is the desired outcome when you get a wearable data and you're getting data constantly, right? And I'm looking at a outcome of a 3-year or a 5-year health outcome. Now, if I have to price a product for aged less than 35 or less than 40, now what are the incidents that we see? In this case, we typically see incidents due to accident, infectious diseases. The chronic conditions are far less. Now, is having data from wearable help me reduce those incidences, or will it impact the people with slightly older ages where the chronic disease or wearable data can help me sort of delay some of the chronic conditions? So I believe the knowledge that we develop as part of our normal work and the actuarial profession, we can actually help Insurtechs in asking the right question when it is to deal with the insurance companies. So that's broadly what I had to say. And to summarize, I think a lot is said that the mindset, as Sumit referred to, and we heard earlier as well. I would like to believe that our role, if I have to draw an analogy in terms of car, is more like brakes. Now, if you think of a brake in the car, the role of a brake in the car is to stop the car. But if you think of other way, it actually gives the confidence of the driver to accelerate. Because if you do not have car, you cannot accelerate. So as actuaries, we can actually give confidence to the people we are dealing with that if this is a product or the proposition that you're doing, the confidence in that it will actually work well is where I think the actuarial role would be far more appreciated in an Insurtech environment.
Okay, great, Abhijit. So, Duke, I will come to you. And before that, I'll pick from what, again, I'll refer to what Sumit had said, right? So, I think Sumit said that when he was talking about actuaries being maybe slightly risk-averse, that I am more inclined towards the other side, saying actuaries are risk-taking. So anyway, so slightly risk-averse, whereas the Insurtechs are willing to, play the game slightly differently, which also means that the Insurtechs are possibly willing to take some hits to the bottom line, right? So end of the day, if you are willing to play the game differently, it also means that the stakes are also high. And when you come to thinking about how do I do planning, forecasting in the world, in a way, insurers, reinsurers, what I have seen in my experience is they all love to see this 5-year business plan, and then they ask you, even if quarter on quarter, explain the deviations and so on. Whereas an Insurtech most likely will operate very differently. So what are your thoughts on how would you approach an Insurtech coming into play when you do business planning and forecasting? And also, have you seen in your experience insurance companies or reinsurers saying that, okay, here is an innovation budget, I'm setting it aside, and I'm willing to play with it. I will learn. Things may go wrong, but when it goes wrong, I will learn what went wrong and try to get better at it. Instead of saying, oh, you told me this, and so on. So what are your thoughts, and any other thoughts you have on how actuaries can, collaborate better with Insurtech?
Makes sense, Gopal. So I'm going to go backwards in the list of things you mentioned. In terms of insurance companies as well as reinsurance companies, they definitely are investing in new ways of doing things. As you, of course you can imagine, right now we're in a semi-hardening market as a global economy. We're slowly, hopefully coming out of COVID-19, given that vaccines, although there are other variants out there. So essentially the point I'm getting to is the fact that how insurance companies typically operate is from an investment perspective. They're either investing in short-term and long-term assets. And part of their investment strategy may be in innovation so that they can ultimately reap the rewards from that. So taking a step backwards and thinking about now that everyone's aware that insurance companies and reinsurers typically do have a budget for innovation to some degree, it really comes down to value creation or the P&L, that 5-year pro forma that you mentioned. Ultimately, I think what InsurTech organizations are looking to do, they're definitely looking to find ways in which they can create value. But to the point that Samit and a few others mentioned, a lot of times someone has a great idea, they understand the technology component, but they really need an insurance expert to come in to help give them guidance. I think when you look at the actuarial profession, the fact that many of us, well, one, for the examination process, you learn so many different topics. And two, our profession is really more of an apprenticeship. I haven't met any two actuaries that have the exact same experience with the exact same skill set because we learn by doing. And so because of that, they would really look to us, I think, is the opportunity for the actuarial profession in the insurtech world that we can help to provide them guidance. Now, with that being said, going back now to the P&L, if we as actuaries have a good understanding, of course, of the pricing and the reserving side, those are really the two largest items on the P&L. That is really the revenue side and the loss ratio that makes up the largest component on the expense side. So I do believe how actuaries can come into play is now by understanding the value chain. How do insurance organizations really operate, how they generate revenue, and really what are the touch points or the data elements, whether it be structured or unstructured, that can help to drive those, is I think where insurtechs or successful insurtechs would be able to thrive because they can easily demonstrate how their new idea creates value for the insurance organization. So in my mind, the actuary and the actual profession really is geared towards helping to facilitate that. And to get to your last point around now, if you're an actuary working for an insurtech company, many times the insurtech has to pitch how they can make value for the insurance carrier or the reinsurer. That was the part I covered at that point. Now the question then comes to, why does an insurtech need an actuary? Or what's the value of an insurtech having an actuary? And I think that's where the actuary can come into play. What I'll carve it out is saying that from an experienced actuarial perspective, the value we can offer is helping them to evaluate as well as test their performer. So for example, a company, an insurtech company may say, I have a service where I can API and provide data, and so I want to charge 5 cents per data. And based off of that charge, this is what my revenue forecast or projection looks like. As an actuary, we may have access to different data sources or experience in terms of what makes up the combined ratio. So when you think about for every dollar of premium you take, you spend roughly 65 to 75 cents on losses, you spend 10 to 15 cents on general overhead expenses and others that gets to their profit. So what we can do as actuaries is essentially work with the insurtech company to help to ensure that their pricing is actually reasonable, that they're not offering a value prop that quite frankly is too high, or that it doesn't really create as much value in terms of it. So when I think about insurance companies and the fact that they're looking to increase revenue or maintain their revenue, decrease their expenses, which I think is where a lot of insurtechs are trying to play, or process efficiencies is also where insurtechs are trying to play, the majority of them. When you think about the decreased expenses, of course, that's always the easiest win. But when you look at process efficiencies, I think that area gets a little muddy because sometimes having a more efficient process doesn't mean that the insurance company will see a financial benefit. And so I think the actuary can really come in to shed some light in terms of which are the ones that are really clear P&L value driven versus which are the value that are more I'll call them the less quantifiable or not necessarily on the P&L, but it helps to create a culture, a way of doing business, one that creates intrinsic value to an insurance organization. And that could be things such as e-commerce or, once again, using unstructured data to make the buying process more seamless for the insured who's looking to purchase an insurance policy.
Thanks, Duke. Sumit, so do you know, do we have some more time or have we run out of time?
I think we've run out of time. We've spent
so
like
then
36 minutes.
Okay, so my apologies, Sumit. So I'm not picking the protect me well topics
okay.
further. Right?
It's okay.
So we don't have time for questions, right?
Yeah.
Okay. So I'll just wrap it up perhaps in a minute. So thank you guys for your valuable input. So the way I see is that, as I said, we as actuaries are trained to look at data quite deeply. We can make sense of data. And we also know what's the financial impact of the decisions that come around the data. And I think most of us, the actuaries working in the insurance world, do understand insurance business. And because of the profession and also the regulatory involvement, our focus has been on doing right things for the customers. So therefore, partnering with Insurtechs and then finding win-win solutions is bound to happen. I would tend to believe that most of the actuaries, certainly some of us, are forward-looking, willing to take the risk, as long as the organization supports it with the right culture and having the right financial metrics to measure outcomes. So it's an exciting journey ahead. Look forward to the Insurtech Association and Institute of Actuaries working together and actually creating many success stories within the next 12 months or so. With that, thank you guys. Thanks very much. And over to you, Shobha.
Thank you.
I think this is the most exciting part of the webinar because here things get a lot more real. So far, we've been talking about, we have heard in actuaries working in an insurance setting or in a consulting setting, talking about how actuaries can help Insurtechs or collaborate with Insurtechs. But in here, we have three eminent speakers from the industry who have actuarial qualifications background, working in an Insurtech setting and creating a difference. The way this session would be conducted is I'll briefly introduce the three speakers and they'll talk about their experience of what they're building in Insurtech world and how their actuarial qualification has helped them doing it in a lot better and a comprehensive fashion. Starting with Yogesh Agrawal. Yogesh Agrawal is the youngest actuary on earth. So and he is also a chartered accountant. He has worked, he has diverse experience right from being a consultant to also being an appointed actuary of an insurance company, which is a highly regulated statutory position. And now he's a founder of Onsurety. The second speaker that we have is Sunil. Sunil is an engineer. He has done masters in operations research, has worked in insurance industry, and now is playing a crucial role at Insuretech. We'll get to know more about it in a bit. The last speaker is Kartik Patel. Kartik Patel is, apart from having his actuarial background, he's also MBA from IIA, has worked with global stakeholders both across geography and across lines of business, and is currently leveraging his actuarial skills and in utilizing credit data and other sources of data to build products which are more useful for the insurance industry. So over to you, Yogesh. Very excited about this session. And let's see how our actuarial skills are helping Insurtechs and insurance industry at large. Yogesh, you are on mute.
Thanks, Amit, and thanks everyone, and thanks IIA and IIA for hosting us. So in terms of, I would say in my background and my association with Insurtech, so basically it started somewhere around 2017, where I started helping an Insurtech in order to develop their products, and then effectively getting those particular products filed, approved by the regulator. That was more like a traditional job of the actuary. But then started helping a lot of business team in designing the solutions for a lot of clients in terms of, and especially the solutions which was originated of developing a lot of technology oriented insurance products, where those insurance products can get embedded under the lot of transaction, and how we exactly ensure that the customers are getting the right protection at the right time. So, being an actuary was being able to understand the basically the client requirement, and was being able to translate into an insurance solution which was effectively more affordable for the customers as well, and at the same time was meeting all the stakeholders' requirement. So I would say in terms of where I have seen, particularly in Indian insurance market, how actuaries are really helping a lot of insurtech is on particularly majorly on the product design and customer journeys, and effectively how they can actually optimize more products on a single transaction, especially on the embedded insurance format. So effectively, if I would say, in terms of my background, had really worked on the in lot of embedded insurance products. Embedded insurance products, be it like how exactly in a mobility product, be it like an Ola ride or Uber ride, how exactly you can get embedded, or if they suppose you are purchasing some equipments from Amazon or Flipkart, how exactly you can get at a right price the right asset protection for those products. So, so these are the experiences what I could share when it comes to the product designing help what an actuary can provide it around. And that also include the product design, underwriting, then helping the company to pass the risk to the reinsurers and getting the reinsurers buy-in. One of the most interesting area where I personally had helped, and again had a quite significant experience now in terms of fundraise. So this is, I guess, this is the topic which I guess other speakers in the panel who had spoken had not touched it around. But I would say that when how we can explain the kind of the concept and the long-term impact of the products and services to the potential investors, I guess that is something one of the key core area of an actually how we can actually uh, take everything into a single picture and can bring up the customer lifetime value and project that customer lifetime value calculation or to the investors. That actually really helps investors to understand what is the business potential of the particular market. Then at the same time, with the fundraising, what is also important is to help is to make sure that the investors are being able to understand the complete business model, what are the risks that can happen on the business model, on the financial part. So effectively, then doing the complete stress testing of the financial projections and making sure that um, they also understand the potential risk levels at the different scenarios are something I would say that being an actuary really helps to explain that to the potential investors. And again, they also get a lot of credibility onto the kind of the advice that an actuary can provide. So I would say these are the areas in my experience I have been working on with the InsurTech, and are currently leading and being a CEO of one of the InsurTech one of the InsurTech on surety at this stage. Yeah. What do you, Sumit?
Yeah, yeah. Thanks a lot, Yogesh. That's very insightful. And as you rightly said, we in the entire webinar, none of us talked about how actuaries could play a crucial role in fundraise. And on surety having raised one, we certainly know actuaries can play a crucial role. Over to you, Sunil.
So I think a lot of the points which I wanted to mention have been covered by a lot of the eminent speakers here, right? So, but one point I'd like to make is that like InsurTech is a area that a lot of actuaries today consider a very non-traditional area of practice. I think it's been growing very fast, and I'm kind of excited to see how the scope of actuaries in this space is going to widen. And I think it's going to have a lot of implications, primarily because actuarial techniques also, it's not only limited to InsurTech, right? It's also it can also be used in a lot of other sectors in the tech world, right? I also see actuaries as a bridge between the insurance and technology in InsurTech. Tech basically, when you talk about any startup, the definition that goes is, you have to have maverick thinkers who think and act outside the box, and there's a lot of chaos in it. And I think actuaries by itself, by definition, add a sense of structure to this chaos, and that's very important in defining how the end product turns up and how the product scales, right? You need to have a balance of both chaos and structure. So I believe that actuaries add a lot of value in this aspect, right? And within an InsurTech itself, I think actuaries, by being the subject matter experts and acting as the internal consultants for the company's business model, helps the company scale and achieve their desired goals faster and more effectively. Actuaries also tend to understand a lot of the risks that the company faces, primarily because of the way we are trained, because of our the exams that we write and everything, but also because like that kind of thinking mentality comes into place where we start looking at scenarios and we start living in a world that's not black or white but shades of gray. So we kind of are able to do that, right? It becomes second nature to us. So at AssureKit, a lot of my work where I use actuarial techniques involve around correctly identifying product market fit. I think it's one of the most important aspects, which a lot of the speakers today have mentioned, right? Vikas had also mentioned that, where identifying and getting a product market fit is very important. And I think actuaries can help a lot there, identifying whether or not a customer would go for this, whether the benefits that are offered by a particular product would help, whether a distribution channel that the company is looking at exploring would be suitable for the product, whether or not the claims process would be robust, whether the pricing for the product has been done, has the due diligence on pricing been done, have the underwriters understood the business model, which becomes very important when you're underwriting risk, right? Actuaries can also help with risk analysis, like Yogesh mentioned, right? How you can do a financial analysis for the company, for the InsurTech, understand where the risks are for the company, identify, quantify different mechanisms, and basically seamlessly work with both internal and external stakeholders, which kind of gels well with what you're trying to do. I also believe that as an actuary, because we work with a lot of data, and because actuaries are also moving more towards becoming coders themselves. I've seen a lot of actuaries who are very interested in learning Python nowadays, right? So by default, what happens is that the transition that an actuary can make between core actuarial work and core data science work has, the line of the transition has now blurred a lot. So I believe that actuaries are inherently data scientists, and for an InsurTech, that becomes a very important tool and a very important weapon that an InsurTech can use to kind of, go about their business, right? So for instance, in AssureKit, we have used a lot of algorithms which have helped us achieve our goal at a faster rate, right? So a lot of companies in the past have manually mapped, say, for instance, make models, right? Which have been a huge problem area in the entire auto industry. We've kind of come up with algorithms. We were able to come up with algorithms which can automate that entire process of taking thousands and thousands of records and creating a mapping set which can easily lessen the workload of the development teams. So I think actuaries can kind of plug in a lot of solutions in the value chain of an InsurTech, which kind of helps them a lot.
Thanks, Sunil. I could relate to many of your points. You saw me nodding when you said many actuaries are now keen on writing Python codes.
Yes.
I've been writing. I took like 6 months course on machine learning. So did KSG, right? So KSG has been writing codes, is now pursuing deep learning.
So
if
I
remember it right.
believe the IFOA might also be coming up with a decision science stream. So I think that is going to open a lot of avenues for actuaries, right? And a lot of new blood into the system, which I'm very excited about.
Right. Yeah. Equally, you mentioned about how actuaries put in structure to the chaos. Which I could again relate from Protect Me Well point of view. In the Protect Me Well, which is a comprehensive insurance needs analyzer, gives recommendation for term insurance, retirement planning, critical illness, and medical insurance all in one go. We make about 200 odd assumptions. But it's in making those assumptions, we made a lot of effort in ensuring that these are grounded and closer to reality. And that's where I think my actual qualification did help me, because if I were to make assumptions around or estimate around what your retirement corpus is, I would never estimate year on year, let's say, investment returns of 20%, right? I mean, and I would also know that over long term, inflation would flatten. Equally, for example, in the questions that we ask, we do not ask what do you think is the inflation rate. I mean, if the person already knew the inflation rate for next 30 odd years, he doesn't need my tool, right? I mean, and that's where I think these subtle points become a lot more important.
That's
Yeah, so do not intend to promote Protect Me Well in this session. Of course, intend to promote, but not as part of the session. But I thought I could relate to quite a few points, and hence I thought of bringing it up.
I think if I may add one final point, Sumit, I think the point you made about selling the actuaries being able to sell themselves, that's a very special skill, which I don't think a lot of actuaries are trained for, right? That's not part of the training. So that point that you made about learning to sell yourself is a very important point. I felt like that's something that the profession needs to perhaps figure out or crack.
Yeah, and I just did sell Protect Me Well. Anyway, so moving on to Karthik. Karthik, your experience has been very different, and you've been already making a lot of impact in the industry. So over to you.
Sure, Sumit. Thanks. Before starting, let me say that I am not a fully qualified actuary. While I was pursuing my actuarial education around 2012, when I was working in UK as an actuarial consultant with the Lloyd's market, I saw this new wave of innovation coming through data science and digital techniques and artificial intelligence, etc. And I thought that in all other industries there is only one, let's say, quant or quantitative person or a discipline or a team or a department. But in insurance industry there are two quantitative guys. One is the actuary and one is the, let's say, head of analytics or the analytics team and actuarial team. And both of them have almost similar skill set in terms of statistical knowledge, but very different skill set in terms of, let's say, coding skill or what do you consider as your scope of work. So generally an actuary would only consider pricing, reserving, capital modeling, etc. as a scope of his or her work. And let's say if it's a fraud modeling, persistency modeling, or let's say propensity to convert at the point of quotation, etc., are not considered as traditionally a part of actuarial work. But if you have the same skill set, you can very well transition to that, or you can broaden your scope of work. And with that motivation, I just stepped out of my actuarial education journey and learned coding, learned the, let's say, how the tech aspect of the insurance industry works. And that has helped me, let's say, build or grow my career in an area where the actuarial science intersect with the data science and the, let's say, computer science. And after that, I have been able to work with LexisNexis, which is the largest insurance bureau wherever they operate. In fact, they are the single insurance bureau wherever they operate. In India also, I was leading the data science team where we were trying to build an insurance bureau, a private insurance bureau for life, auto, and health insurance industry. I was fortunate enough to work with, let's say, policy and claim records, which were upwards of 10 crore in number. And nobody can claim to have worked on such a big data. And I was also, let's say, a consultant to Ayushman Bharat, where the number of eligible people is more than 50 crore. So I would sometimes joke with my European or American colleagues that the data set that we work on is actually almost equivalent to the entire population of North America or Europe. So, and after that, now I'm working with TransUnion Civil, which, as you know, is maybe the largest commercially accessible repository in India of the data of around 50 plus crore individuals. So having work on data sets which are, just bigger than the big data, let me say this, that there has never been and there will never be a situation where you have enough data to build a model. I do not think that now we have enough data to build any model, let's say at a certain level of accuracy, because you are always building a model at a point in that entire insurance value chain. So for example, at the point of sale, if you are trying to build a model, when you are actually touching the customer for the first time, you have very, very few data variables available about him. But if you are building a model at the point of claim, where you want to flag, let's say, propensity of fraud, you know a lot about that individual already. And retrospectively or post facto, when actuaries try to build a model, they are used to working on data sets which contain everything very nicely. Let's say a lot of policy data, declarations related data, health data, renewal data, and then claims data, and what happened even after the claim was filed. And if you move to Insurtech side, then the Insurtechs who are trying to impact the insurance value chain towards the beginning of the funnel, which is, let's say, sales or underwriting, you will see that a lot of time all the data are not available, despite the fact that in the market there are too many data items being sold and being purchased. And that is where I think that I don't think actuaries are, let's say, risk averse. They are just not used to working in an environment where you do not have enough data available when you are building the model. So once you shift your mentality to a data science, how the data science person thinks of is that whatever data I have available today, I will try to build whatever is the best possible today. Even that means not building a statistical model at all and building a model which is purely relying on some business assumptions or business logics or heuristics. And then over a period of time, I will improve my model. And as a lot of you may have heard in the past that machine learning models learn on their own, and that is exactly where the data science guys go wrong, because they do not understand that in the life insurance it may take a couple of decades for the actual experience to evolve, and your model cannot wait for 10 years to learn from the data, right? So, and that is exactly where, if you are coming from the actuarial side and moving towards data science, you can bring in that perspective that at some point you cannot do machine learning because we cannot afford a model to be learning for years, and you will have to rely on much more time tested statistical methods. Or let's say when early mortality problem was discussed earlier. So even on the early mortality side, I would say that if a lot of you can go back to your respective insurance companies or your insurtech vendors, you will actually discover that almost all the early mortality models are, let's say, logistic models or some variation of logistic model. It could be GBM, random forest, some machine learning models, and hardly a model takes into account the exposure, because a policy may not renew after 1 year, may not renew after first quarter, and then what happened to that person, you don't know. A policy may not have spent a year or a 2 year or 3 year, and you still need to combine all those policies together to build a model. So an actuary can bring in that first principles based sense to this madness that we need to build everything quickly and we need to turn around everything quickly, and then we will learn from the data as the experience evolves. Some things can be learned with the experience. For some things or some problems, you need to collect everything first, and then only you can start building the model. And I have been able to, let's say, work on an insurance company level data, entire insurance industry level data from the insurance bureau, and external data such as credit data or any other alternate data. So it is possible to replace certain insurance data items with the proxies, either coming from the industry or coming from an external data world, primarily because a lot of models which we are building using insurance data, while building the model, we forget that earlier we were complaining about customers doing misdeclarations. So if the customers are misdeclaring, and that is a very big problem in the industry, how can you use that same data to build a model? So these kind of questions maybe Insurtech is not able to ask, maybe the data scientist working in that Insurtech lack that kind of a holistic first principle based academic or let's say experience level background. But an actuary can always come in and question and try to improve those situations or conditions. Another point, and I know that now we are running out of time. So another point I would like to mention is that apart from this quantitative skill set or let's say first principle level thinking skill set, the other thing which is definitely required in Insurtech is understanding of technology, because Insurtech includes tech, and that digital way of thinking is not an actuarial skill set. It is, let's say, a human skill set. So if you are detail oriented and if you can think about certain technological constructs, APIs, etc., and you can follow them in a step-by-step manner, then you can appreciate those concepts and you can build that knowledge, and then you can combine the statistical thinking and digital thinking together to achieve something which is actually a digital thing. Otherwise, let's say a digital without smartness, it's just an automation. So that is where I would like to end. Thank you.
Yeah. Thanks a lot, Karthik. That was very, very insightful, especially when you talk about how the business knowledge or the insurance domain expertise becomes sometimes more important than using technology in InsurTech setting. Not saying that technology is not important. There's no InsurTech without technology, right? So we're not even having this discussion without technology or innovation in that sense. But sometimes the finer aspects play a crucial role. I know overall we are running out of time, but thankfully we saved like 5 minutes in this session. So thank you, everyone. We'll end this session now and move to the last session, which is the vote of thanks. Thank you, everyone. I'm conscious of time. I'm also conscious of the fact that you're seeing me way too frequently in this webinar, so I'll be really, really short. We cannot not thank everyone who contributed to the success of this session, starting from the audience who showed a lot of interest, signed up in huge numbers in a very even though the announcement went out about a week ago. And then moving on to Prerak, who is the co-founder of India InsurTech Association. He originally conceived the idea of why not have a MOU between IIA and Institute of Actuaries of India. And once that happened, he also conceived this webinar. So thanks a lot, Prerak, for conceiving the idea and making it a success in some form or shape. Moving on to President Subhendu Wal. He, of course, played a crucial role in signing the MOU and also set the right context in terms of how actuaries could be very, very useful in InsurTech setting. Having Mr. PK Arora from the regulator's office was an honor for all of us. And the fact that he has worked in what is called an InsurTech setting 25 years ago is quite encouraging for all of us. And we are also lucky that we have someone who's as innovative and someone who has tried working with technology in his experience at regulator's office. So we cannot be more lucky living in this time working in Insurtechs. The second session, which was moderated by KSG, I wish to thank all the speakers, starting from Vikas, who brought in perspective of what insurance companies look for when they collaborate with Insurtechs. Equally, Abhijit, when he talked about how his experience is helping, doing something which is more around onboarding, not something which actuaries do as core part of their job. But since actuaries tend to get involved in every part of the insurance value chain, they play a crucial role in something which could be which could be something like onboarding as such. And Duke, of course, brought in interesting aspects around how insurance companies would have some fund reserved for innovation and why they would be interested in collaborating with Insurtechs, and how insurance companies would see a P&L projected by Insurtechs from their eyes. And of course, KSG, who kind of ensured that this conversation remained connected the dot and ensured that asked the right question and brought in best from the speakers. The last session, where we heard 3 speakers from actuarial background, but actually making a huge impact in InsurTech world, starting from Yogesh. He talked about a very interesting skill that he brought in, a very interesting use case of actuaries helping raise the funds, because since they understand business quite well, as part of their role, they are required to do business planning, and how that skill, along with everything else, played a crucial role in his current role on Charity. Sunil, of course, talked about how his experience has been helping in building, making make models, data issues, solve the challenges around make model, and how he is now getting more inclined towards writing codes, and how that in turn could be useful for actuaries. And towards the end, Karthik talked about how insurance domain knowledge has been helping him in solving problems around doing innovative solutions for insurance industry while in his current role at TransUnion Civil. Yep, so that's really it. Thank you all for taking out time, and apologies for the delay that we had in starting the session and finishing it by about 7 minutes late. Hope to see you again and look forward to your feedback. Thank you, everyone.